What is your pick and why?
My pick is SLB. It's the stock formerly known as Schlumberger. I always feel a little weird saying that. It's like the artist formerly known as Prince. But anytime you rebrand it, it is a little bit funny to me. But I love this stock for multiple reasons. Number one, let's talk the macro. Look, we're at $90 to $100 oil, and this company is so well exposed to international drilling activity. So even though we have seen lower rig counts in North America, we're seeing massive expansion in international waters, especially offshore and especially Middle East. This is a dominant player in the oil field services. And so the macro looks pretty good for fourth quarter. Higher oil prices and drilling activity, especially international, is much higher than we've seen a little bit slump here in the Permian.
I want to push back on you. As always, I got to play the devil's advocate to your pick right now. So you're saying that international revenue is a big part of the story for SLB, formerly Schlumberger. They get about 80% of their revenues outside the U.S. A big part of that, of course, is China. We're going to show the audience the PMI data out of China. China technically in contraction. Our friends from the China Beige Book say it's not really in contraction. It's kind of flat. But still, according to the data points right here, we're seeing at 49.7 technically in contraction. Also, Mexico just recently became our top trading partner. Does that change the story about China and the rebound? Is it maybe time just to lower expectations for China's oil demand and the so-called rebound we've been expecting?
No, I do think China's going to stimulate their economy. They seem to have always found a way to continue to push forward and grow. So I have faith in their ability to say, hey, look, this country's not where we want it to be. Our growth is not where we want it to be. And that I think their government's going to continue to step in aggressively to stimulate and have more growth. Mexico also, they do a lot offshore. They're a huge player
Okay.
in the Gulf area. They have major partners from Saudi Aramco to Petrobras to their new partnership with BP. And Schlumberger is such a well-positioned company. They have these partnerships and joint ventures, but it's beyond just digging these holes in the ground. It's also digital integration, energy transition, and so if you look at this
Okay.
diversified company, you can see all of these revenue growth opportunities beyond just drilling holes in the ground.
All right, I want to bounce one more thing off of you. Higher for longer is a reality for every part of the market. Yesterday, Minneapolis Fed President Neil Kashkari said there's a 40% chance the Fed will have to move rates meaningfully higher. Are you worried about demand destruction as rates continue to move or stay higher for longer, but could even move meaningfully higher?
Not right now, not in the fourth quarter. Obviously, that could come into play next year if that does drive everybody into recession with higher for longer and starting to talk about 6-7% rates. That seems pretty bad for economic growth. But when I look at the fourth quarter, I see a lot of catalysts to how we move forward. And one of those catalysts is energy security. So everybody wants to have more secured stockpiles, more secured, and we need to refill our SPR. And so as these countries realize, oh, what Russia happened with Europe and natural gas, we need energy security. Everybody is looking to ensure their SPRs are full, their supply of energy is with trading partners they feel comfortable with. And so that's going to continue to drive this activity beyond just some of the macro. We need to kind of continue to refill everything we drained the last 18 months to keep gasoline prices lower.